let's talk about income statement. That's one of our major financial statements for merchandising company. When we were service industry, the structure of income statement was really simple. The service revenue minus expense, operating expense, that we call operating income or net income. That's not sure, but we use operating income, right? It's pretty much simple. That's service industry. But merchandising industry, because of nature of business, we have more than one expense. Remember? So we have operating expense like here, let's say sales, that's the revenue, name of the revenue, the merchandise industry, right? Let's make it lower. Operating expense, same as service industry. We have what? Product expense as well. So we have two sections for expense under merchandising industry. Sales minus cost of goods sold, we call gross margin. Gross margin minus operating income, then operating income. Same as this one. Good? And then we discuss more about sales. That's gross sale, but now we know we have to deduct what? Sales return and allowance, and sales discount. Finally, once we have net value of sales, that's what we call net sales, right? So we have more in income statement under merchandising industry compared to service industry, right? Then I'm going to add up one more after operating income, which is other revenue or expenses. Then finally we're gonna get the profit. See? Because we have more accounts on the merchandise industry, we have a little bit more complicated version of income statement. We have two expenses, right? This format of income statement we call multi-step income statement. We have two types of income statement format. Single step, just revenue upside and then expense afterward. Yeah, definitely same amount of profit. That's why we call single step. But this multi-step, we have good reason why we over 90% of company they use this format, multi-step income statement. Why? Because it says a lot from the format. Sales and gross margin. Gross margin represents earning after subtract, that means after deduct product cost from the sales. That's gross margin. Then operating income. Operating income, earning after product cost and business operation cost. So that's the earning from major business activity. And this last profit, that's final one. We need to consider if we have other revenue or other expense. What's other revenue? Let's say our business is merchandising. We are selling or selling our products to purchase. That's merchandising. But actually, my parents inherited the building of the company. So I gave some rent for the space. So I have additional rent revenue. That's not the revenue from my business, major business, right? This case, we have to record this after operating income section. Then I borrow the money to expand my business. Then when I pay for interest, that's not actually directly from operating activity. So we record just below operating income as part of other expense. Finally, we're going to get the profit. So by using multi-step income statement, we can have more refined information from income statement. Gross margin, operating income, and profit. Understand? That's why, as an accountant, we use format of income statement and format of classified balance sheet. But users and finance industry, they want to see the numbers, ratios, to compare, to analyze horizontal analysis, vertical analysis. Anyway, so actually we learned several ratios so far, right? Gross margin ratio, gross profit ratio, same thing. And also profit margin ratio. How? Definitely gross margin percentage here. Gross profit. Here, definitely profit, right? That's the numerator. What's denominator? Based on what? Sales, net sales, what? Net sales. Numerator, gross margin. Denominator, net sales. How much gross margin out of our real amount of sale? How much percentage of profit, final profit, out of our net value of sale, real value of sale, real value of revenue? If we have any ratios by using income statement, I can say over 99% case, we use net sales, not this gross sale. Why? This is not real amount we can expect to collect. All right? This is net sale is the real amount. That's why for ratio, I can say 1 or 2. But most of case, we use net sales when we use income statement for ratios. Good? So that's about multi-step income statement and ratio. Before I let you go, selling return and allowance, selling discount, that's what we call same as what? Accumulated depreciation. Same as withdrawals, we classify as a contra account. They are the contra account of sales. So opposite, contra means opposite. And what's second last? What's the second last step of full accounting cycle? Think about it. Analyzing transaction, blah, 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 and adjusting, blah, blah, blah. So finally, we produce financial statement. Then what? Is that the last step of accounting cycle you learn? No, we have more, right? Second last one, that's closing. The last one, that's post-closing trial balance. So, closing. When we close, what's the first step you learned? Kind of revenue, the first. And then second step, kind of expenses. And then the third step, we close income summary virtual account itself. And then last one, we close withdrawals. Doesn't matter. Size of company, industry of company, we have 4 steps for closing. Closing means we close what? Only temporary account. Temporary account means, I hope you learned that and remember, temporary account means what? Any account from income statement. That's what we call temporary account. Plus withdrawals. That's what we call temporary. What's permanent account? Balanced account. If we have more accounts under income statement, sounds like we have to close more accounts. I'm going to address the step and account next time. Okay? Anyway, we gotta know, we need to remember we have more accounts to close under merchandising industry compared to sales industry, service industry. Okay?